Did you decide to make 2024 your year of financial literacy? If so, you're definitely going to want to watch this video. We're going to go into very common questions that are asked when trying to get into and figure out your personal finances.
Yeah.
So let's jump into it.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting. You'll spend it and be broke again.
All right, guys. So on this channel, we talk all things personal finance, financial literacy. We're working towards financial freedom. So if you like that kind of content, please don't forget to like and subscribe and share this video to other people. We really appreciate it, getting this content out there for more of you guys. Be sure to tune in every week as we're posting videos weekly on new great topics. And if it's something that you want addressed, feel free to leave it down in the comments below. And we'll be sure to take a look at it and get back to you or create a whole video. All right, so starting this all off is a pretty basic question. One of the most fundamental things that you do need to have answered is how to create a budget and stick to it. Sounds super simple, but it's really not, because most people struggle with this. A lot of people don't even have a budget. So to start off, what is a budget? It's really just having a plan for all your money. You know, you factor in your income, your expenses, what you're trying to save towards. So you have your money designated to each of these categories: needs, wants, savings. You're covered. Everything has a plan. It's just not spending willy-nilly.
So first up, you're going to want to write down your projected income. It's usually easier as like a W-2 employee because you're going to know pretty roughly, good idea what you're going to make every 2 weeks. And if you include your spouse, I don't know, if you have some kind of dividend income, you can include that. But everything you can think of that you make that hits your account that you're taking in. And then once you've taken all the income, the next step, step 2, is going to be to write all your expenses. Everything you have, the easiest way to look at it is just look at your bank statements, look at your credit cards, what are you buying, and put them in a category and add up all those categories, or add it all together. And then you can see how much your expenses are per month. One, this is good just to see and know, because maybe you can save on a few things. Wow, I didn't know I was paying for 2 Netflix. You can cancel one, stuff like that. But it's also good to help set up the foundation of your good budget.
So you want to kind of have a general idea of these, because some of these are set needs, you know, like I have to pay the mortgage and my insurance and everything. So you'll have kind of 2 giant categories there of needs and wants. And we have a few different videos on the difference between needs and wants, because I know they can get a little bit muddled at times. So feel free to go check out those videos for a bit of a deeper dive and separating all these categories out. But having a general idea of that way, later on down the line, if we need to make cuts, we know kind of, okay, well, I've spent so much in my wants, you know, let me cut down there. Or maybe your needs were so high, like, okay, I'm living above my means. So having a general idea of that is also very helpful.
Definitely. So next, what you're going to need to do is do the math and subtract it out. So now that you have your income, subtract out your expenses.
Because if we're at this step right here where we're subtracting all our expenses from our income and you realize you're in the negative, you're getting a negative number, you are running in a deficit, which is very detrimental. That's how people end up in crippling debt a lot of times. If you're in a surplus, great. You know, but we're just going to give that an assignment, like Ryan said, you know, whether it's to paying off some existing debt or saving for the future, you got to give it a plan still. But that's the most basic outline of creating a budget right there. So, you know,
again, we have tons of videos on this. One for a $50,000, one for a $70,000 salaries. So go check those out. They're great examples. We do all the math. We run through all the examples, what goes in needs, what goes in wants. Please go check that out. I'll help answer that question a lot.
Yeah, but as far as sticking to it, which we have a recent video where we discuss a lot of budgeting apps, things like that can help you. Now, having the self-discipline is where this really becomes crucial. So you just have to stay motivated and really focus and committed to what you're trying to do. And it's easier to do that when you have a set goal in mind. Put your money to work for something, like whether it's, you know, just buying yourself something or going on vacation or being able to get out of debt. Keeping that in mind and having almost a way to visualize it. A lot of people will hang something up where they see it often like a visualization of people on the beach, like, okay, I really want this beach getaway in Hawaii kind of thing. Being able to visualize those goals are a great way to keep you motivated. I mean, and just different ways of visualizing. Because I mean, if you go to charities, you know, sometimes they'll have that thermometer that they kind of coloring in as they're going out. That's because it's a motivating factor. People want to achieve the goal. That's what will further motivate people around to donate more money that reach that final goal. Kind of find ways to make it fun for yourself, or at least keep you motivated. Also, accountability partners are a great way to do this as well.
Question 2, what is some of the best ways to save money and build an emergency fund? This kind of goes hand in hand a little bit with the last question on budgeting. If you're focusing on budgeting and you're able to cut some of your expenses that are just easy, like I said, 2 Netflix, if that happens to be the case, or wow, we spent $1,000 going out to eat, let's cut that down to $750 instead.
Still a lot.
Yeah, it definitely is. But for an example, then you can take that excess money you've now cut and you can save that and put that in savings. That's one of the easiest, quickest ways. And the people that just start budgeting, typically the ones that are able to find the most money easily, because they've just been going at it with all this money is ours to spend. Versus now you can see where everything has a mission and, oh wait, what happened? Why am I spending so much here? Let me pull some away from that.
That first budget, eye-opening.
Exactly. So that's the quickest way to grab a lot of money that you didn't know you actually had. And then every month you can do that and adjust and say, oh, wow, our electric bill is way lower than last month. Let me take that excess and put it towards savings. So you can just build excess every month. That's probably one of the easiest, is having a budget you stick to.
And you may have heard of this concept if you've been kind of looking into finance, or maybe you already have just aware of this, of paying yourself first, setting aside money for your savings and certain things like that before, go out and spend things on wants. It's a great way. That way, it's untouchable. You gotta kind of put that in your mind. This money's untouchable. It's already set aside. So what I have left after that is my fun money.
Right.
And going back to just the concept of an emergency fund as a whole, you kind of need to have an idea of how much you need to save. The general rule of thumb that you'll hear is 3 months of expenses. Some people say up to 6. If you go beyond that, really, you're kind of just watching your money depreciate.
Yeah.
So that 3-month mark is a pretty sweet spot right there. Next, of course, you'll need to determine where you're going to be keeping this money. A lot of people in this case recommend high interest savings account or a money market, something like that. Something where it's very easily accessible, because this money needs to be liquid.
Exactly.
If it's tied up in the stock market, that's not an emergency fund, because the stock market could plummet. That's an emergency. You get hit with another emergency, you're screwed.
Yep. All right, so lastly, oftentimes the other question you hear outside of credit cards is savings accounts. What's the best savings account? What are the drawbacks of different types of savings accounts? So the typical savings account at a major bank or most banks is going to be where you can hold your money, you give them a deposit, hold your money, and they give you an extremely small interest back. So basically, they take your balance and they give you like 0.01% on that. So you get pennies or dollars, nothing crazy. It really doesn't make you any money. It doesn't even keep it with inflation. So it's really not worth it. It just allows you to hold your money there and keep it liquid, so you don't have to keep it under your mattress. That's pretty much the whole thing. The biggest benefit or drawback between multiple savings accounts is you're going to want to look at the interest rate. Sometimes you can get a little bit better. Sometimes banks will offer a high yield savings account. It's pretty much the same exact thing as a savings account. It just offers a higher yield. It offers a higher interest rate to pay you back. So at 0.01%, some of them even get up to 5%, which is an insane difference.
So this is the good interest, not the one you're paying, the one they're paying you.
Exactly. So when we talk about credit cards, it's different. They're giving you money back for holding your money in their account. We can explain how banks work, and it would make more sense why they do that. But if you're interested, let us know in the comments. But all honesty, it would be a little bit more of an explanation. It's not part of this question. But the drawback you want to look for is if there's fees. A lot of bigger banks will say, we'll allow you to have your money in our bank accounts, but we want a minimum balance. And we want minimum daily balances, minimum transfers, so they can see activity in their bank, and you keep bringing them more money, basically. If you don't do that, we're going to charge you fees. And you're like, well, I don't want to not make any money on a savings account and get charged fees. So you want to be on the lookout for that.
That's why a lot of people start with, their local banks and credit unions. Some of the smaller ones, they're just geared towards normal people, because that's their kind of whole base right there.
Even nowadays, right now, interest rates are high in terms of, general interest rates, but with that, it brings up savings interest rates or high yield savings accounts. It's not really considered an investment still, because you're looking at 5%, but then you still got to pay a tax on that because it's income. And so you're like, okay, now it's really like 3% you're making. And again, it doesn't really stick up with inflation, so you're still losing money. So they're not really investments. It just helps you lose a little bit less in inflation if you were to go that route. It still keeps your money liquid, still a great option, but almost, I would say, a 95% of cases, if you're going to a banking institution, we are looking at credit unions almost every time. If I'm going for a mortgage, a credit union is being thrown in the mix, because typically they're going to have better rates. They're going to be more for you. They're going to want to help you better. They're going to have better resources for you, and they're going to have less fees. Same thing with credit cards. Lower interest rate, less fees. The savings accounts probably have no fees, so they're almost always better.
So you can basically think of the savings account as a super safe piggy bank. It's not something that you could lose track of, really, or misplace kind of thing if you were keeping it at home. You do need to keep in mind kind of accessibility. I know you may be thinking, well, my local bank is just that, local. A lot of times they'll be sisters or have a sister bank where you can also make withdrawals from places. That was like the case for me. I had a credit union up in Georgia. I moved to Florida. That branch wasn't down there, but they had a sister bank, so I didn't have to pay the fees to make a withdrawal when I needed to. So kind of look into that. Keep a general idea in that. But this is really just about security, and that's the biggest selling point for a savings account, I think, frankly.
And so we hope you guys are enjoying this type of video, these episodes of these basic questions that come up. We're really trying to kind of scour and remember when we were starting and everything. how we got into it and what questions we had. So that we can formulate these ideas and then answer these questions. So if you have questions, please leave them in the comments below so we can use those in future videos. But we really enjoy making this kind of the basics of finance, Finance 101. I'm not exactly sure if we worked out all the kinks for the title, but that's where we're going right now. It's like Finance 101, just kind of the general gist of how to get around, like what the school didn't teach us that should have, stuff like that, the basics.
And if you want us to do a little bit deeper dive or a more detailed breakdown on any of these questions that we've already covered, please also let us know in the comments. We can really dive into these because financial concepts as a whole, you can really get into the weeds with.
And we can do examples and really draw it out to be a little bit more easier to understand. But yeah, we love making these content for you guys. So please, again, don't forget to like, subscribe, share with a friend that could help them with all these. They've had these questions before. And we'll see you guys in the next one.
Stop wasting money on that dumb shit and instead put it in investments. I know it's tempting. You'll spend it and be broke again.